we're still in crypto summer. It started last June. It'll go to this coming June, right after the halving. Then we go into crypto fall, and that's the real parabolic part. We'll get to that. The halving changes the fair value.
Yeah.
The halving cuts the block rewards, right? So the block rewards get cut in half. So if the price stayed the same, half of the miners would go bust, right? Okay, so that doesn't happen. So what happens is the price adjusts, and this is the mind-blowing part of the code, right? Satoshi created this amazing built-in mechanism for price to move. And the reason that's important is movement of price attracts participants.
Yeah.
And so what we've seen is the fair value doubles. Now, we started to talk about the fact that maybe, so that means the fair value would go to 100. So let's think about that, 6 figures. And so it's then in that crypto fall, right, which is where you start to go toward that new fair value. And people are like, wait a second, this price is moving so fast. And then the speculators come in and the gamblers come in, and then we shoot right through. And then you got to have winter again.
Get ready for what's coming, because these last few weeks might just be the best time to invest in Bitcoin before its inevitable surge. With the halving drawing close, many are anticipating Bitcoin's greatest price increase yet. In his latest interview, Mark Yusko has given us the latest price predictions and insight on Bitcoin following the halving, and his message at the end of the video will blow your mind, so be sure to stick around until then. Also guys, if you want to stay most up to date on the Bitcoin and crypto world, I sent out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 50,000 others to become a better crypto investor right now. Now here's Mark Yusko's updated Bitcoin predictions and insights, starting with a rundown on the Bitcoin ETFs.
So now the ETFs. Yeah, we talked about, we thought they'd get approved. Now I thought it was going to happen on Elvis's birthday, January 8th. It happened on the 11th. So I was off by 3 days. Not bad, not bad. But I also really believed, and I was wrong, and I'm fine with being wrong. I believe they were only going to let BlackRock. I really thought they were going to, just say all the money's going to BlackRock. Now, most of the money is going to BlackRock, but they did let the other 8 get approved, and they let GBTC convert, which I wasn't sure they were going to do that either, because Gary doesn't like, the DCG guys very much. He got beat up. I mean, he got smacked down, and he had no choice. Now, on the ETH, he has a choice. He's probably going to delay that for a while. But on Bitcoin, he had to give in, and he did. So the Bitcoin ETFs, and remember, we went to 47 right before the ETFs.
The ETFs got approved,
Right before they got approved, like on the 10th, we were at 47. And everybody's like, that's front running, buy the rumor, sell the news. And they're just buying. Now, I don't know for certain, I don't have inside information, but I believe some of those are owned by BlackRock affiliates or friends. Yeah. And they were accumulating so that they could sell, because BlackRock knew they had at least 2 billion of orders before approval. Turns out they probably had more than that, and they got 10 billion now. But I think they were accumulating so they could sell into that, because it's hard to find Bitcoin right now. There's just supply and demand problem. So what happened is, it was 47, and then, like clockwork, down it goes right after the approval. And everybody's like, see, I told you, sell the news. I'm like, no. This is not a sell the news. This is buy the rumor, buy the news. Why? If you're a big institution, not an individual, not a small mutual, if you're a big institution and you want to buy an asset, the first thing you do is you sell some of it. Yeah. And you even short some of it. And you even spread rumors that you think this asset sucks.
Yeah.
Because you don't want to pay a high price. You want to pay a low price. If you think about this. So price is a liar, right? The price of an asset is not the value of the asset. The price of an asset is what 2 people agree to sell a small amount in exchange for a good or service. That's a price. The value, something very different. If I own 100 shares of Microsoft stock, whatever the price on the screen is, I could get that. If I own 1 million shares, I can't get that price.
Nope.
because the price will fall as I try to unload the million shares.
Yeah.
So that's where you have a not enough demand for more supply, so an excess supply, so the price will fall. So supply and demand look like this. So the halving event does something to the supply, right? The supply goes from 900 a day of newly minted Bitcoin to 450. So that's a supply shock. The ETFs are a demand shock. Well, why does that matter? Well, let's think about this. The fair value is the fair value.
Yeah.
The price is what two people agree to sell a small amount to each other. But here's how that changes. The fair value is going to change at the halving. Now, I don't think it's going to double this time. Why? Well, transaction fees are rising because of ordinals and inscriptions. And so the reason the fair value doubles at a normal halving is there's half as many block rewards.
Yeah.
Okay. But if there's half as many block rewards, but the miners can get paid for inscriptions, then they don't need the price to go up all the way 100%. So maybe it goes up 60% this time. Well, then what's going to happen is we're going to have, so that's the supply shock. But we've had a demand shock. So what happens when you have a demand shock? There's a certain amount of supply and there's an increase in demand, right? So you got a fixed supply and an increase in demand. P1, the intersection point, is higher than P0. So the price goes up. Historically, that triggers FOMO, right? Because the price is built in to rise because we have excess demand and now limited supply. And the hodlers, or hodlers, however you pronounce it, don't want to sell. Bitcoin doesn't grow. It doesn't get better. The money's getting worse. We price Bitcoin in some other currency. So Bitcoin's been making a series of highs against currencies all around the world. The Turkish lira, the Venezuelan bolivar versus the Argentinian peso, the euro, and now yesterday the dollar. Someday, maybe, we'll all think in Bitcoin, right? There is a chance that, today Bitcoin is digital gold. What does that mean? It means it's money. Because the only money in the world is gold. Money is an asset that exists in the absence of a liability. Everything else that we think of as money is currency. It's not really money. Money can't have an associated liability to be true money. Currency is just what we use through belief and custom. Like, think about it. We use green pieces of paper in the United States. In Israel, they use yellow pieces of paper. In China, they use red pieces of paper.
Yep.
What the hell? It's just a piece of paper, but it's a belief and custom that we will exchange a good or service for that piece of paper. Let's say I had a bar of gold, which, I don't have one right here, but if I did, I think I'm a reasonably strong guy, but I couldn't break it in half or into three pieces because I'm going to send you each a piece. Even if I could break it, which I couldn't, but even if I couldn't stuff it in the computer and send it to you, right?
Nope.
So it's not very divisible and it's not very portable. Whereas all the Bitcoin in the world actually fits right here. I could send it to you with a couple punch of buttons. And that's cool. So it's more divisible and more portable. And so it could become all money.
So there's Mark Yusko with his expert Bitcoin predictions and insights for this cycle and what's bound to happen after the halving. As he said, the halving event reduces the rate at which new Bitcoins are created, thereby decreasing the supply of Bitcoin. This reduction in supply will cause a massive supply shock, leading to a surge in Bitcoin's value. However, Mark Yusko predicts that this time, Bitcoin's value may not double due to the rising transaction fees caused by increasing demand for Bitcoin. Despite this, Yusko anticipates that the Bitcoin price will increase nonetheless, emphasizing the importance of understanding the relationship between supply and demand shocks in determining Bitcoin's price trajectory. Recently, Bitcoin has been surpassing its previous all-time highs, and based on its current price, it only takes a small percentage of increase for it to do so. Before you leave, don't forget to check out our daily 5-minute crypto newsletter. It's packed with expert predictions, on-chain data breakdowns, and the latest breaking news in the crypto space, all delivered straight to your inbox, completely free of charge. The link is the first one in the description. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.